Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hinks. In a day where there's a little volatility in the overall market, it's only right that we check in on where things sit here, Kev. S&P is right now down 72, NASDAQ down 149, both over 1%. The Dow Jones down 2.33%, but the Russell is trying to stage a bit of a rally here, Kev, as it's now almost 33 points off of the lows. So even on down days, we have this kind of jostling for position, as you were describing it, a lot like a horse race in a way, Kev, taking place even on these down days where we tend to see correlations go together.
Yeah, I mean, this is a great day for watching the market and seeing, I mean, when you turned on your television this morning or the TD Ameritrade Network, the news was all negative this morning, right? I mean, it was very hard to find anything positive about the overall market. So I think getting down to that 50-day moving average on the S&P, now that sets something into motion. Where is that a level where cash can start coming off the sidelines? You're still looking at a 10-year yield at now 1.2 and threatening going into the 1.1 level here, Alex. At some point, that's still the fundamental, unnoisy way to look at the market is that still makes stocks unattractive. And you made a great point about what Oliver said on Morning Trade Live, which is this sounds like it's significant, the Delta variant of the coronavirus. But if you look at a big picture of the entire coronavirus, this is a small blip in that bigger picture. And learning to live with the coronavirus is what we're going to deal with. And I think that's what the market is trying to figure out right now, Alex.
Yeah, I couldn't agree more. We're hoping it doesn't become more than a small blip, but at the moment, that is what it appears that it is. Well, let's talk some Chipotle. This has been a huge winner over this period of time as it's really mastered the kind of delivery and direct-to-consumer model. To help us do that, I want to welcome in TD Ameritrade Network contributor Jenny Horn for our hashtag segment. And joining us from LikeFolio.com is the VP of Research at LikeFolio.com, Megan Brantley. Chipotle is one of my favorite places to get a meal, but that doesn't necessarily always mean that it's a great stock investment. So guys, talk to me a little bit about what we're expecting here for this earnings release and what the data looks like. Jenny, I'll let you set things up here.
So I liked Kevin's point about how the news was very negative this morning, because I have to say that when looking at Chipotle from a fundamental standpoint, it's pretty positive. Over the last 5 years, it's gained about 250%, and really it's grown its EPS over the last 5 years by about 6.5% a year, which is actually slightly slower than its share price, which has gained an average of 30% over the last 5 years. So extremely healthy growth metrics there. Now, it's fair to assume that investors have a pretty high opinion of Chipotle when you look at this 5-year return. But a lot of this is due to its sort of acceleration into digital sales, which now accounts for about 50% of its total sales. So like Alex mentioned, it has done a very good job faring what has been a difficult environment for the restaurant industry as a whole. Now, it's returned about 50% over the last year and over 110% over the last 2 years, and actually just recently touched new all-time highs. Now, historically, when it typically goes up at this amount, it's met with a decline like we're seeing right now. But this could signal to some investors that it's at the high end now of its valuation. I mean, it is a forward PE valuation of more than twice of some of its larger and equally as successful restaurant chains like Yum Brands and McDonald's. So this could suggest that, Chipotle has priced in some of this strong earnings and sales growth that we could get tomorrow. So some are saying that, it's at the high end of its valuation. It's run up as far as it could possibly go. But I have to say that this is typically a name that surprises to the upside. So it's fair to say we should not yet discount it. But it did recently raise its prices by about 4% across the board. And management said this was just due to these increased employee wages. But there is this concern now with some of the things we're seeing in supply chain and the rising cost of beef and poultry that this could actually affect its current quarter. Which brings me to our first tweet of the day, which says, Chipotle reports this week, as always, a simple and stellar business. Will likely sell off into amazing earnings and the cost of ingredients and labor cost increases. So I think that was a really good point, because Chipotle is objectively an extremely well-run company. The CEO has done a great job turning it around over the last few years. But I do think there are, industry headwinds that it can't necessarily avoid completely, despite how powerful it is. And our next tweeter sort of talks about some of these headwinds we saw prior to the new CEO sort of taking the reins, which says, remember when Chipotle had an E. coli scare and the stock plummeted? Yeah, neither can I. And I thought this was so funny because, Megan, I actually feel like this is something we've talked about with you all a lot, how they couldn't really get a grip on some of their health concerns and people were getting sick. And it was obviously terrible for consumer happiness, when you're scared to go eat at a restaurant. And I think they've gotten this under control. So I'm curious what you're seeing.
Yeah, I think that the most recent negative, big spike in negative sentiment that we've seen was when they tried to release the new queso unsuccessfully. But then after hiring the Taco Bell CEO, that kind of remedied that problem really quickly. But one thing that we're watching is when we're listening to people who are talking about these digital orders, we're seeing some of that growth tempering. And so this is one of those things that digital is so important. As you mentioned, it comprised, I think, just over 50% of their sales last time. So these digital orders overtook the actual in-person orders. And when we look at those mentions, you're seeing a little bit of loss of momentum. Now, are we expecting these digital sales to come in 36% lower versus 2019? No. But what this really shows is these first-time user mentions are slowing down. So the new consumers that they're bringing into this digital environment, that's starting to slow down. On one hand, you do have a really good experience on this digital app. If you guys have ever used the app, some of the most positive mentions that we see at Chipotle are when consumers are talking about using their app because it's so strong, it's so effective. It's so easy to use and it's almost addicting. We see a lot of people talking about how they're addicted to using the Chipotle app. It pushes these notifications and they take advantage of it. So I think that Chipotle has done a really good job creating this ecosystem with its app. However, we are starting to see just a little bit of loss of momentum. So that is one thing to watch, as you mentioned, as the stock has recently been trading near all-time highs. It's a really, really high bar, and there's a lot of growth that maybe is already priced into this report.
Megan, now this is kind of a tricky topic here because when we're dealing with the reopening of an economy, digital mentions trailing off, does that have something to do with people just simply going back into Chipotle and ordering and sitting down and ordering manually? I believe me, yes, you are right. I have used their app. I've never touched an easier app to use in my life than Chipotle's. It is outstanding. But is this drop-off, do you have any data? Is it people just simply going back in the store versus a significant drop-off in just overall usage?
That's a really good question. I think that one way that we can look at it is we can compare it versus another fast casual peer. For us in our universe, the best comparison is probably Shake Shack. And I will note that if you look at a quarter-over-quarter basis, so this would be that reopening momentum that you might mention, Chipotle is trailing Shake Shack by about 12 points when it comes to consumer demand. And so whenever you see one company kind of building this momentum in a Shake Shack, now obviously this is more of a kind of growing and expanding in terms of physical location versus, say, a Chipotle. But there is a little bit of weakness comparatively when we look at a Chipotle versus a name like Shake Shack. And I think a lot of times, too, another thing to consider is as people are going back into restaurants, and we know that they are, is Chipotle where you're going to want to go and socialize with friends and have this experience? I'm not certain that's the case. But so far in our data, we aren't seeing any significant pop in terms of in-store mentions to lead us to believe that it's going to be enough to kind of offset that digital growth.
Megan, that's where I was going to kind of go with this. And so if you're Chipotle, obviously they were able to kind of weather the uncertainty of the pandemic through really strong execution, a product that delivers fairly well in terms of holding on to its quality, after going from the store to your home. But when it reopens, we know this is a name and a restaurant that did very, very well in the fast casual space before the pandemic too. But that's the key piece, I think, is what you're getting to now, which is by opening up, do more of its competition kind of come back into play? And when we're venturing out, are we just sick of Chipotle to some extent? I hate to say it, but like if you had too much of it, and are you looking to kind of venture out other places? From your data, do you have any feel on where Chipotle is there? Is it going to be okay? Is it going to be resilient in the reopening economy, but kind of lose some of its luster for growth?
I think that Chipotle is very strong. Like, we're not worried about this company long term. This is just one of those things, looking into earnings, looking into this earnings, they're just kind of losing that buzz, that momentum with consumers. When we look at overall mentions, those are actually down about 37% year over year. And I think some of this is just that normalization, kind of that what you're getting at, Alex. I think that this is so regular and so normal that people, you might tweet about your first or your second time using the app, but maybe you're not going to tweet about, every single time that you visit Chipotle after that, because it is a bit normalized. I will say that one positive note that Chipotle has going for it is the price increase that you mentioned that I think started to come into impact or coming into play in June. We haven't seen that really impact overall levels of consumer sentiment. I think those have fallen maybe 1 point year over year on a 90-day moving average, which really is nothing. That's flat. That's almost negligible. So I think that does show that Chipotle has some pricing power. They do have these loyal consumers, but heading into at least this report, our earnings signal is starting to lean a little bit bearish, just because we think that the bar is really, really high, and there may have a little bit of trouble meeting these growth expectations.
So Megan, that was actually exactly what I was going to ask, because this is one of these names that has sort of a cult-like following. I remember when they raised the price of guac, it was like this complete outrage. So I was curious if the raising prices has impacted them at all, but I feel like since this is such an industry-wide issue right now, that maybe they're faring all right. But I am curious, because Chipotle, where I see it separate itself from, say, a Shake Shack or a McDonald's even, is that it's healthier, so it claims to be. I mean, you can go and you can make it not healthy, but generally speaking, it's GMO-free, it's more organic, it's healthier. So does that in any way impact consumer happiness, that people are tending to want to go there when they have these sort of, specific diets, or they want to, say, eat healthier in terms of dining out?
Yeah, the fact that they have, we track all kinds of tags. We track the Whole30 bowl inside of Chipotle. We're listening to these keto-friendly bowls. You also had the introduction of cauliflower rice, whenever I was looking at some of these negative sentiment tweets, it was because the cauliflower rice, this plant-based option, was seasonal. And so a lot of consumers were missing this option to be able to select and order. And so that's something that Chipotle has a little bit of power. They like to release these seasonal items like the carne asada, like the cauliflower rice, to kind of, re-entice and I think keep consumers hooked, to maybe keep things fresh whenever you have something that, you can't have had in the last 3 months and now it's available. Maybe you're more inclined to go revisit. But it is interesting. They definitely do have more of those, health first or just consumer customizable or personalized menu items that can apply to different consumer diets that maybe other fast casual chains don't have.
Yeah, I think it's a great point. I think it's an example of their good execution in terms of they're really familiar with who their customers are and what they're interested in, and by providing some of those options, making it a little bit easier for them to achieve those goals, it makes them more likely to be a returning customer. But Megan, great stuff, a good setup here. If I were to sum it up, it sounds like maybe cautiously unsure around the short term, around the earnings because of the high expectations. But as you said, you're not worried about it long term, and this is a company that's proven to be very, very lucrative for investors over time, so not a betting against it on the long term. Megan Brantley, the VP of Research at LikeFolio.com, thanks for joining us.